Let's quickly bring on board Amit Agarwal, who's the ED and Group CFO at DCM Shriram, to talk to us about Q2 numbers and give us some perspective on how the industry is playing out. Welcome, Mr. Agarwal. It's good chatting with you. I want to first start off by asking you about your Q2 numbers. Slightly on the softer side where margins are concerned. Could you talk to us about what's happening, especially where sugar is concerned?
Yeah. So I think margins have been better in this quarter, both in our chloro-vinyl business
Yeah.
as well as some of the other businesses. I think on sugar, what you're saying is right. But sugar this Q2 is a lean season for sugar, right? Because most of the production happens in Q3, Q4, and partly in Q1. So Q2 always has the lowest profitability. That is point number one. Second, the other thing that has happened is that the cost of production of sugar last season was higher by about 400 rupees, and the selling price hasn't kept pace with that. So I think that is the reason why the numbers are a little softer with the same period last year for sugar.
And what's the impact like, Amit? You know, a large part of that, of the export ban now coming into play and reflecting on numbers also likely. Is that what is also keeping a lid on the numbers where the sugar business is concerned? So just talk us through how pricing is really evolving in this current regulatory landscape.
Yeah, I would say that exports going forward will play a significant role, right? If you talk of this quarter, I wouldn't say exports have played any role because same period last year also we did not have any exports. I think in the coming season, what we are advocating with the government that given that the total inventory in the country is close to about 8.5 million tons, and we expect another 1 million ton or 2 million tons to get added in the next season, which has already started. So then they should allow exports, which will help normalize the inventory, which should be in the range of around 6-7 million tons.
Okay. And has cane crushing gotten delayed largely because of elections?
No. We've already started the crushing. All our 4 factories have started in end of October.
Got it. And how is inventory playing out in terms of raw materials? I know you did talk a little bit about inventory right now, but just give us a little more granularity on that as well.
So inventory, given that the production levels are higher, even for us also the production levels were higher last year, and the feedstock we used, as a result, it was higher. So our inventory also is a little higher, but our sales also have been higher. So that's where we are. It's not alarming, frankly. The inventory levels are not very alarming.
Hi, Mr. Agarwal, Varsha here. Good show when it comes to chemical side. So good uptick in volume and margin, especially in chloro-vinyl. So I just wanted to ask you, what's the update there? What growth are you expecting going forward? And I think chloro-vinyl contributes almost 26% to your top line. Now, where you want to take this contribution to?
Yeah. So see, the better profitability of chloro-vinyl business is largely driven, whether you look at the quarter or you look at the half year, is largely driven by the improvement on the cost side. So there have been significant improvement on the cost side, one driven by the lower energy costs, as well as, or let's say the input material rates, as well as the efficiency levels, which have gone up because we commissioned a 120 megawatt more efficient coal-based power plant in Q1. So I think those are the efforts that company has been doing, and also in market in general. Therefore, our input costs have been lower, and we expect them to sustain for the rest of the year. And therefore, profitability margins, my sense is either will improve or will remain at the same level for the balanced period of the year.
Got it. And what kind of growth are you expecting when it comes to chemical business?
See, I would say significant growth, given that we've done a lot of investments, and so we have invested close to about 3,500 crores in chemicals business. Our 850 tons per day expansion has already got commissioned in May of this financial year. So as a result of which our volumes have increased. Then we have our hydrogen peroxide plant, which got commissioned in August this year. Then we have epichlorohydrin plant, which is coming up in Q4. So I think all these put together, we are seeing a lot of action happening in this space and good growth from next financial year onwards.
All right. Also, talk to us about your 310 crore capex when it comes to aluminum chloride facility and your calcium chloride. Now, when this is going to be starting, and what is the peak revenue utilization that you're expecting? When can we achieve that peak capacity utilization?
Yeah. So see, one, we need to understand that these are chlorine downstream projects, because in chlor-alkali business, the constraint is chlorine. That how do India doesn't have enough market for chlorine, given that we are very small on PVC production. Now, therefore, since we've expanded on caustic soda, and chlorine is you can call it a joint product or a byproduct, therefore we have to find exit for chlorine. So these facilities have been put up to use our chlorine, right?
Now, yeah,
That is
please
one.
go
So
ahead.
which will actually lead to better profitability of the caustic capacity. So that's how it has to be looked at. Now, in terms of capacity utilization, which you mentioned, we will commission this project sometime in April of 2026.
All right,
Sounds
understood. Now, when you say that these are the downstream products that you're coming up with, how much margin expansion you are expecting from this?
These projects don't really lead to margin expansion. They are very low on margins, right? They have to be looked at in. So they help me, as I said, they help me utilize the capacity which I have come up with, which is on the 850 tons per day expansion of caustic. I will not be able to ramp up that capacity quickly unless I find exit to chlorine, even if it means low margin products, because my margin is coming from the 850 TPD project.
Understood. Also, your hydrogen peroxide, and the ECH plants. Now, what would be the optimum revenue potential that you're expecting? Because I believe that this capacity utilization will take more 3 to 4 years to ramp up.
Not really. I think hydrogen peroxide we expect to utilize go up to 90% capacity utilization by next year. Epichlorohydrin probably will happen by the year after, right? So I think it's a matter of 1 to 2 years when we see the capacity utilization reaching about 90% levels. Now, in terms of top line, I think it's a function of what the prices are, right? But I can give you a capital output ratio. Hydrogen peroxide has a capital output ratio of close to about, again, depending on prices, but anywhere between 0.5 to 0.7x. And epichlorohydrin will be close to about, same 0.8 to 0.9x.
right. And Mr. Agarwal, just the impact of this new anti-dumping duty which has been imposed on PVC.
Yeah.
What's the impact going to be like both on you as well as the industry as a whole?
Yeah. So see, one, currently the notification that has come, that is a recommendation that has gone from Ministry of Commerce to Ministry of Finance. So it has not been implemented as yet. So once the approval comes from Ministry of Finance is when it gets implemented. Now coming to your point on the impact, so let's say for India, the major impact will come from China, given the fact that most of the PVC that we receive, or large part of the PVC that we receive, comes from China. There, the range of duty will be around $80 to $125. So ballpark $100 you can assume as an impact, which will straight away go into the prices.
Got it. Okay. Thank you so much, Mr. Agarwal, for coming in, speaking with us. Great perspective, as always.